Hi friends, good morning, good afternoon, good evening. How are you all? Yes, I'm good, I'm good. I'm CA Veeraj. I'm here to make your economics interesting. Yes. Sir, what is interesting? You will know once the class continues. So, we will begin with today national income. We will deal with a simple concept in an interesting way. You will understand how different the concept which we are discussing. Sir, we learnt it in PUC in a different manner. Sir, it is totally conceptual, totally interesting. Yes, that is why I am here. Shall we begin? So before beginning into a concept, first we will understand what is national income. National income means it is the money value of all the final goods and services, money value of all the final goods and services which are produced in a country in a year. We call it as the national income. It is the money value of all the final goods and services which are produced in a country in a year. Sir, what do you mean by goods and services? What do you mean by produced? As you already learnt in your PUC, a economy is always having three sectors. One is primary sector, secondary sector and tertiary sector. The primary sector consisting of some agriculture related activities, maybe agriculture, maybe dairy farming, maybe poultry farming, etc. In case of secondary sector, maybe manufacturing, maybe construction, every type of sector it is there. And with respect to tertiary sector, like services, banking service and the service which we give, education services, hospitality or medical services, all those comes under tertiary sector. If you add all those in terms of money value, then we get the national income. Sir, can you give an example for national income? Yes. If I just say in a simple example, we have produced 100 units in the current year which are having a price of 10 each. So can you tell me? Yes, I know you are intelligent, but can you tell me how much it is? It is 1000 rupees. This 1000 rupees we call it as national income as per the definition. Is it okay? Sir, we understood this. If you have understood, we will proceed further. Sir, what do you mean by proceed further? There is a concept called as different concepts of national income. Different concept of national income in your chapter. Sir, what is different concept of national income? I think you might have studied in PUC. There is something called as GDP, there is something called as GNP, NDP, NNP, etc. Sir, how did we used to learn it? We used to learn it by way of GDP is equal to, by a formula, GNP minus something plus something. It is what we used to by heart it, everything. But today, we will not do that. We will not get into the by hearting part. So then how do we remember it? How do we learn it? For that, making it as interesting, making it as simpler, I am here. But you should be with me. Before we proceed further to those concepts, I want to discuss 4 simple and important concepts. Sir, what are those 4 important concepts? First concept which I want to discuss with you is the constant versus current prices. The constant versus current prices. The second concept is gross versus net. gross versus net. Then the third concept is domestic versus national, and the last but not the least is market versus factor cost. Market versus factor cost. Sir, what is this? We will begin. We will start discussing. We will start with first concept, that is constant versus current prices. Constant versus current prices. Sir, what is this constant versus current prices? The constant versus current prices is like whenever we measure our national income. Whenever we measure our national income, sir, how do we measure? It is by output multiplied by price. Output multiplied by price. And if you see here, it is constant versus current prices. Constant versus current prices. We are considering only the prices. Whenever we are measuring this national income, what price we consider will determine whether it is a current price or constant price. Sir, what is it? If we have known, there is something called as inflation index in our country. There is something called as inflation index. Sir, what is this inflation? We don't know it. Don't worry, I will make it very simpler. Consider, you know this pencil, Apple pencil. Last year, I bought it for 100 rupees. Current year, it is selling at 105 rupees. That means, can I say price has been increased by 5 rupees? From 100, it has become 105. That means, in percentage term, if I want to say in percentage term, can I call it as there is a 5% increase in the price of a pencil? Yes, sir. Sir, how did we find out? It is like 105 minus 100 is equal to 5. This 5 rupees is increased with the base of what? With the base of 100. Because we are finding it in the percentage term, we are required to multiply it by 100. Now can I say it is 5%? Sir, what is this 5%? It is a increase in the price of a commodity from the last year. That is what we call it as inflation. Inflation is nothing but increase in the prices of the goods and services. Understood now? Done. Okay. Yes, sir, we understood this. What is this constant versus current? You did not clarify that. Yes. As I told, it is output multiplied by price. Again coming back, this cost inflation index is like this base year, whatever you are seeing here, 2001 and 2 base year, it is not decided by you and me, it is decided by Government of India, where it says all the prices which are present in that year will be considered as a base year prices. So any increase in the prices of that year, from that year, we call it as inflation index. It is a statement showing how the prices are increasing from year to year. If you see here, in 2001 and 2, it is 100. Again, 100 has become 105. Now can you tell me, as we already discussed, what is inflation? How much is the percentage of inflation here? Yes, sir, we obviously know it is 5%. Sir, again, if it goes on calculating the same way. If you look 2003 and 4, it is 109. If you see again 2004 and 5, continuation to all those things, in the 25-26 year, in the year 25-26, it is 376. Sir, what is 376? In simple terms, a commodity which is worth 100 rupees in 2001 and 2 is worth 376 rupees in 25-26. That's it. Is it okay? Okay. Once you saw that, once you understood that, if you see here, output multiplied by prices. If I take an example, for example, I'll take 2 years, 2001 and 2 and 2002 and 3. 2001 and 2 and 2002 and 3. What is this? This is year. Then comes output, then comes the price part. If I take the sorry, if I take an example output of 100 units, not 100, we will take something else, it will be better, 50, and it has increased from 50 to 60. The prices were 100 rupees in 2001 and 2 and 120 rupees in 2002 and 3. Sir, what is national income of 1 and 2 and 2 and 3? Sorry, we already know it. It is 5,000 rupees, 100 multiplied by 50. It is 7,200, 120 into 60, 7,200. Now, if you carefully observe, we multiplied 2001 output with the 2001 and 2 prices. Can I call this the price which is there in 2001 and 2, 2001 and 2 prices as base year prices? Base year prices? Yes, sir, we already know that. What is this 120? This 120 is not the base year prices. This price we call it as current year price. This price we call it as current year price. Yes, sir, we already know that also. What is that constant versus current? If I take an example of this 2002 and 2003 and multiply my 60 units of output with 100 rupees price, 60 units of output with 100 rupees of price, then I'll get how much? 6,000. Yes, sir, we know it. But instead of that, if I multiply that 60 with 120 rupees of price, it is again, we already know it, it is 7,200. Yes, sir, that is 7,200. The thing of rupees 6,000 is called as national income is measured at constant prices. Sir, what is constant prices? Now tell me please. Yes, whenever you multiply the current year output with the base year prices, we call it as the national income at the constant prices. Sir, instead of multiplying with the constant prices or base year prices, if you multiply the current output with the current year prices, we call it as current. National income at current prices. National income at current price and national income at constant price. Is it okay for you? Sir, can you take one more example? Yes, we will go. Because it is 1 and 2, it builds the example 2. In 2001 and 2, I have produced same 50 units and the price is 100 rupees. It is output, it is price. Price is 100. But in 2000, we will take 2425 for easy understanding. 2000, 2425, where I produced 400 units, and the price is 500 rupees in the current year. Sir, can you compute the national income at current prices? Yes, sir, national income at current price equal to, when I say current price, we will multiply the current year output with the current year prices. Yes, sir, that is 400 multiplied by 500, that is equal to 20,000. Sir, can you compute national income at constant? Yes, sir, that can also be easily done. 400 multiplied by not 500, but it is 100 rupees. You take only the base year price, irrespective of year in which we are. If you consider the base year prices, base year price may be 100, base year price may be 80. Here they called it as 100 because they wanted to represent it in percentage. Whatever the price which is there in 2001 and 2 is representing 100%. That's it. So here it is. So I think it is 2 lakh and it is 40,000. It is 40,000. Understood? Yes, sir. Constant versus current is done. We will continue to the second concept. Sir, what is our second concept? Sir, gross versus net. Gross versus net. Sir, what is gross versus net? I know that you already know it. Gross versus net. In your college, when you are solving that accountancy, in the balance sheet, if I prepare the balance sheet of 2 years, for example, 24-25 and 24-25 and 25-26. Simplicity, I know this balance sheet is not used by the companies now, but I'm simplicity purpose I'm taking this T format balance sheet. It is vertical, which is applicable now. Now I'm taking. Consider I am having one property, plant and equipment which is worth 100 rupees. It is balance sheet as at 31st March 25. 31st March 25, it is 100 rupees. Whenever it comes to the next year, it comes by way of opening PP. Yes sir, we already know that 100 rupees. But at the end of the year, whenever you want to record that as PPE on the balance sheet of 31st March 26, 36 March 26, you will record what? PPE thing, then 100 is the opening, and you will charge, consider 10 years is the life, I am going by SLM method. 10 rupees is the depreciation, and the balance is 90 rupees. Sir, what is this balance? This can I call it as opening balance of the PPE? Opening balance of the PPE? Yes sir. What is this? This is closing balance of the PPE. Closing balance of the PPE. Or for simplicity, can I call this as gross value of the asset? Yes sir. It is gross value. If it is gross, then what is this? Can I call it as net? Yes sir, we understood it now. The gross versus net, the main differentiating factor between gross versus net is a simple thing. We call it as depreciation. Depreciation means what? For our Kannada students, it is savakali. Yes, you understood gross versus net? Then we will go to the third point, which is market versus factor cost. Sir, what is this market versus factor cost? As we already know that there are 4 factors of production in our economy. Sir, what are those 4 factors of production in our economy? We know one is land, labor, capital. Some people call it as organization, some people call it as entrepreneurship. Both are same, organization or entrepreneurship. If you know, these are the factors. This is not the cost. These are the factors. What is the cost of factors of production? What do we give in return for using of the land? Yes sir, we pay rent. For labor, we pay wages. For capital, we pay interest. For entrepreneur, we pay profit. We take the profit. Understood? Yes sir, we know it from PU1. Sir, what are you trying to prove that? If I ask you a question, I am talking again about this pen. For the purpose of manufacturing of this pen, this pencil, the cost of land, I call it as directly rent. I am supposed to pay 1000 rupees of rent. I am supposed to pay 3000 rupees of wages, and interest on the borrowed capital I am supposed to pay 1000 rupees, and profit which the owner takes is 3, 4, 5. Consider we will take 3000. If I total it up, what is the total value? It is 8000. You tell me now, is this 8000 rupees, 8000, is it the cost or selling price? You tell me, think and tell me, don't be in a hurry. Think, take a 10 seconds, pause the video, think and tell me. Is it cost or selling price? Everybody would have thought, sir, it is selling price. Sir, why it is selling price? Sir, because the profit is also included. That is why we call it a selling price. No. That is why I told we will make this concept interesting and simpler. Sir, what is the difference between then market price versus factor cost? Then your selling price is a price in the market. It is what we call it as market price. Factor cost is the cost of factors of production. The cost of factors of production. So, the differentiating factor here is, it is not the profit which makes the difference between cost and factor cost and market price. It is, you just think, just because I produce and I tell it is 8,000, do you think government will allow me to sell the commodity in the market? No. Nirmala Sitharaman, our honorable finance minister, will never allow it. Sir, why? Because they bought something called as GST, goods and service tax. The moment you pay GST on the goods sold, they'll allow it to sell it in the market, marketable product. That is why we call it as, it is factor cost. Sir, what is factor cost? It is the cost of rent, land, cost of employees, cost of capital, cost of our own entrepreneurship, our own organization. You just think common sensely. I know common sense is not common for everybody, but I assume you have the common sense. Yes, I know it. So you just think common sensely. This rent is paid for the purpose of using somebody else's building or somebody else's land. This wages is paid for the using somebody else's hours or maybe month, maybe salary by wages. Interest, because I borrow some money, I have to pay the interest. But what am I taking in return? Am I not working for the business? Yes, sir, I am working for the business. For that return, I am taking it as a part of profit. All those things are the factor cost only, the cost of all the factors of production, land, labor, capital and entrepreneur. The moment I say factor cost, it is the rent plus wages plus interest plus profit. Sir, then what is market price? Market price is nothing but it is factor cost plus, I call it as IDT. Sir, why IDT? Will understand it in the further video. IDT. Sir, what is this IDT? Indirect taxes. Sometimes the institute calls it as directly IT only. Actually, I prefer to call it as IDT because there is one more tax called as income tax. People get confused from IT and IDT, but institute calls both the ways. That's okay. So it is, as of now, I am keeping it as IDT only. Factor cost plus IDT. Sir, what is this IDT? Consider, for simplicity sake, I am taking the GST rate on the pencil is 5%. Is 5%. Yes, sir. Understood. What is the factor cost? It is 8,000. The moment you pay 5% of 8,000, it becomes the market price. Sir, what is the 5% of 8,000? Can I call it as 8,000? 8 5 is 40. That means can I call it as 400 rupees? So the market price is equal to 8,400. Sir, we understood this example. What are you trying to tell? In a simpler manner, the difference between market price versus factor cost, is IDT, indirect tax. Sir, we understood. Don't be in a hurry. I am not done yet. We have to discuss one more point here. Sometimes the government will also give some subsidy for the purpose of some goods and services. If it is very, very essential for our economy, for the growth of economy or something like that, then government will try to give some subsidy. Sir, what is that subsidy? I pay 400 rupees of tax. Government says, okay, we will give you 200 rupees of subsidy for every commodity sold. 200 rupees subsidy for every commodity sold. If you carefully observe here, it is like I pay 400 rupees tax. That means can I call it as, it is outflow, or can I call it as expense also? Yes, sir. What is this 200? Can I call it as inflow? Or can I even call it as income for me? Because I am receiving from the government. I am paying 400 rupees from my pocket to the government. I am receiving 200 rupees from the government. Sir, okay. What is the net we paid? 400 minus 200, that is 200 rupees is what the amount we paid it to the government of India. So that is, sir, can you consolidate? The factor cost equal to, we know, rent plus wages plus interest plus profit. Yes, sir, understood. The market price equal to, it is factor cost plus IDT, because it is cost plus tax is also cost, the cost is also cost, minus subsidy, But sometimes the institute uses the word net of this part, they call it as NIDT or NIT, net indirect taxes. Sir, what is net indirect taxes? It is 400 minus 200. Net I paid 200 rupees. That means 8,000 is my cost of production plus 200 rupees the net indirect tax I have to pay to the government. The total market price is 8,200. Sir, what is this? If you want to buy this pencil, you have to pay 8,200 rupees to the shopkeeper, so that he will keep 8,000 for himself. He will pay 200 rupees to the government of India, that is their share, GST. That's it regarding this thing. That is a concept. Understood? Yes, sir, we understood. But I am not done yet. Keep on listening. Go on listening. Sometimes institute uses the word other words for these things. One is rent, second one is wages, then interest, then profit. The concept is same. Sometimes they call this wages as compensation to employees. Yes, because they work, we either give the wages or we give the compensation for their work. That is what compensation to wages. Yes, sir, we understood. But this rent plus interest plus profit, all the three combined together, it is called as operating surplus. Oh, yes, operating surplus. Yes, sir. Sir, then what is it? I'll again consolidating. You think whether it is I am telling right or wrong. The factor cost equal to, it is rent plus wages plus interest plus profit. Yes, sir, we already discussed. Instead of that, can I call it as operating surplus plus compensation to employees? Yes, sir, both are same only. Both are same. Yes, sir, that is absolutely right. Yes, done. There is one small concept in this, we will complete it, then we will move forward. The next small concept here is, consider, as I am a CA, I am a practicing CA, I am sitting in my office. Consider this example. I am sitting in my office, a client comes to me on some GST matter or on some income tax matter. He has some clarification, because we are professional, we are specialized in those areas. He comes and discusses those matters, and after elaborated discussion of 1 hour, he got the solution. So I charge him 10,000 rupees. Now tell me, whatever the money I charged, is it falls under rent? Is it falls under labor, wages, or is it falls under interest, or is it profit? You might be thinking that, sir, it is profit. Think twice and tell me, is it profit or what? Take 10 seconds, pause the video, think and resume the video. It is none of the four. Sir, what are you trying to tell? Yes. Whenever I am giving the service, I am sitting in my office. That means I am not sitting under any tree and giving the services. Whatever the 10,000 I have collected, there is some share of rent also. Whatever the 10,000 I have collected, there is some wages also. I might be employed somebody, there might be something else. So there is some part of wages also. Is it interest? Interest might be there, might not be there. Again, There is a part of my profit also. Sir, under what point we have to put it? Under what head? Is it rent, wages, interest, profit? No. For that, there is a separate thing called as, this thing called as, we call it as MICE. MICE means it is mixed income of self-employed. Mixed income of self-employed. Sir, what is this mixed income of self-employed? The income is a combination of multiple things. It is consisting of rent also, wages also, interest also, profit also. But it is not coming, this mixed income will not come for employees, because as an employee I just give the service, I get the wages. I give the service, I get the wages. This MICE will come only for self-employed people. Maybe advocate who is practicing on his office, maybe company secretary, maybe cost accountant, maybe chartered accountant. So, you understood? Yes, sir. Now, I am redefining and writing the final equation. The factor cost equal to, it is rent plus wages plus interest plus profit plus MICE, because this is also a part of it, plus MICE. Sir, can I again write it as operating surplus plus compensation to employees plus MICE? Oh, is it? Yes. This is what we entirely call it as factor cost, the cost of all the factors of production. Sir, what is market price? I will try to give the multiple angles so that if anything comes in the examination, anything being asked in the examination, you will be very comfortable solving this. Market price equal to, the simplest one is factor cost plus NIDT. What is factor cost? Combination of all these things, or all these things, we call it as factor cost plus NIDT, net indirect taxes. Now, instead of factor cost, can I call it as rent plus wages plus interest plus profit plus MICE plus NIDT plus NIDT? Yes, sir. This is also same. Or can we say operating surplus plus compensation to employees plus NIDT plus, first of all, we forgot that MICE plus NIDT. Yes, sir. This is also right. Again, can I write it as operating surplus plus compensation to employees plus MICE plus IDT minus subsidies. Oh, yes, yes. I am just bifurcating this NIDT into IDT minus subsidy. IDT minus subsidy. Is it okay? Yes, sir. We understood. Crystal clear. Everything is understood by conceptual way. Sir, what did we wanted to discuss? We want to discuss that GDP, GNP, but we are discussing something else. Don't be in a hurry. Just listen for 5 more minutes. You will be very comfortable in this. The fourth concept which we had is the domestic versus national. The domestic versus national. What is domestic versus national? Consider domestic means it is the, as I already told the definition, the money value of all the goods and services which are produced in a country in a given period of time. Sir, what do you mean by in a country? See, if you think practically, in India, some Indian companies are also there. For example, Tata, for example, Reliance, for example, Infosys, etc. So many things. And there are some foreign companies also who are having some their factory and offices in India. For example, in Bangalore only, we have Apple. Apple is not that eating apple. It is Apple company, iPhone, MacBook, those things. And there is Hyundai also. There is Hyundai also. There is Google also. There is Indian companies also. There is foreign company also. It is not only about the company. There are some Indian citizens also here. There are some foreign citizens also working here. Yes, sir. It doesn't matter who is working, which company is working. If it is producing in India, we call it as domestic. Irrespective of whether it is produced by Indian companies or Indian citizens or Indian firms or foreign company, foreign firm, foreign LLP, foreign citizens, within the domestic territory of India, then we call it as the domestic income. Yes, sir, we understood. Then what is national? National means, if you just think, in India, the Indian people, Indian persons, as well as foreign persons. Person may be company, individual, partnership firm, maybe company, maybe LLP, maybe artificial juridical person, any person can be, are working. Yes, sir, we understood. These two things only we call it as domestic. Think from USA angle. In USA also, some USA people are working. For USA, some foreign people are also working. If we go and work in USA, we are foreigners for USA. Yes, sir. For example, as an individual, Sundar Pichai is there. Sundar Pichai, who was Indian citizen. Or there are so many Indian people also who are working outside India. Okay, sir, understood. If you total this thing, we get a domestic income of India. If we total this thing, we get a domestic income of USA. Yes, sir, perfect. Now, for the purpose of getting the national, you have to do domestic. Sir, what is domestic? We know that Indian people as well as foreign people, but foreign people are not for Indian people. So, you deduct, these people are there, right? You send their income to their respective country. You don't include in your country income. That is, the foreign people income earned in India. The foreign people income earned in India. Okay? When you send that income of foreign people to foreign country, now we should even think that our people are also working abroad. You should bring their income to our again Indian income. That means plus income earned by Indians working abroad. Income earned by Indians working abroad. Sir, what is this? Can you simplify it? Yes, that is the reason why I am here. So, domestic, we already know it. It is the summation of income of a country, irrespective of who produces it, it is there. Then national means, national equal to, it is domestic minus NFIA. The domestic minus NFIA. Sir, what is this NFIA? NFIA means net factor income from abroad. Net factor income from abroad. That means it is a net. We also working outside India, outsiders also working in India. So you bring our income to India, you send their income to outside India. That means we bought 100, we sent 80. That means 20 rupees is called as NFIA, net factor income from abroad. Understood? Yes. These are the 4 concepts which I wanted to discuss before discussing the different concepts of the GDP, national income. Now, shall we enter into the concepts? Yes, sir, we will enter into the concept. So we will begin with GDP. GDP, sir, okay. Before starting with that, how many concepts are there for the purpose of measurement of national income? There are mainly 8 different concepts for the purpose of measurement of national income. Sir, what are those 8 different concepts? One is GDP at market price. Second one is GDP at factor cost. Then GNP at market price, GNP at factor cost, NDP at market price, NDP at factor cost, then NNP at market price, NNP at factor cost. These are the 8 different concepts by which we can find out our national income. So what is this? We will begin with the discussion. GDP at MP. Gross GDP means gross domestic product at market prices. Sir, what is market price? We know that it is factor cost plus NIDT. Yes, we know it. What is domestic? Domestic means it is a value of all the goods and services which are produced in a country in a year. Yes, sir, that is also known, irrespective whether it is produced by Indians or whether it is foreigners. What is gross? Oh, gross means gross versus net, that concept. Yes, including the depreciation, we call it as gross. We call it as gross. Sorry, I forgot to tell something here. In case of gross versus net, the differentiation is the depreciation. The depreciation is also called as consumption of fixed capital. Consumption of fixed capital. It is like I am consuming 10%, 10%, 10%, 10% for the next 10 years of our capital. That is what we call it as depreciation. Yes, sir. Perfect. We'll continue. Listen. So GDP. Can I say, as I told, G means it is gross, domestic means it is the production which is money value of all the goods and services which are produced in a country. Yes, sir. What is market price? Including the indirect taxes, that is net indirect taxes, is called as GDP at MP. Okay, sir. Can you try to simplify it? It is summation of money value of final goods and services in a country, or I can write it as within a country in a year. Yes, sir, we understood this. In the examination also, ICA will be given with one value out of this. Either it will be given GDP, or it will be given GNP, or it will be given NDP, NNP, any type of things it can be given. But once we have one thing, one second. Yes. I want to have some water. So once we have this, now finding out of GDP-FC, it is not so difficult. Sir, how it is? I'll try to take it in a different page. Consider the institute has already given GDP-MP. The value of GDP-MP is already given by institute. From the GDP-MP, consider this is 1000 rupees, for example. Can we find out GDP-FC? Yes, it is very easy. What we have? GDP-MP is what we have. What we have to do here? We have GDP-MP, we should reach to GDP-FC, gross domestic product at factor cost. Okay, we will do it, sir. What is a great deal? It is like, what do we have here? Gross. What do we need? Still gross only we need. What is it? Domestic. What do we need? Again, sir, domestic only we need. Product means it is a goods and services. There is no difference between that. What do we have? Sir, we have market price. What do we need? Factor cost. Oh, sir, what is the difference between market price versus factor cost? It is NIDT. NIDT means minus NIDT, net indirect taxes. That means if you minus NIDT from this, won't it become GDP at FC? Yes, sir, that is what we learned. Now you would be understood why I took that almost 45 minutes for discussion of that concepts. It is very, very interesting, simple. Done? So, shall we summarize whatever we discussed? We will solve these equations in a bit, but we will summarize it first. So, what the concept we have discussed? We have discussed one is current versus constant. Second concept which we discussed is gross versus net. Third concept which we discuss is national versus domestic. Fourth one is market price versus factor cost. Market price versus factor cost. What is the difference between constant versus current? Constant versus current. Yes, sir. The main difference between constant versus current is inflation. That is, inflation is nothing but rise in the prices. You tell me, is constant is higher or, sorry, current is higher or constant is higher? It is, take 10 seconds, pause the video, think and tell me. Always the current will be higher. Why? As we already told, whenever we measure the national income at current prices, we will always take the current year prices. But whenever we measure the national income at constant, we always take what prices? Base year prices. We always take base year prices. When I say base year prices, it is always less than the current prices. And don't forget, there is an exception. What is that exception? The exception is deflation. Instead of prices rising from year to year, if the prices started fall from year to year, then at that time the constant could be higher than the current. But luckily it will never happen, because we always say we are the developing country, we want to develop. For the purpose of development, we should always consider that prices are increasing from year to year. That is what the difference. Yes, sir, we understood. That is not what I wanted to tell. What I wanted to tell is, yes, the difference is inflation. You tell me which is higher. Yes, sir. Current is always higher than constant, except that deflation situation. Is it okay? Done. As we again discussed, what is the difference between gross versus net? It is depreciation. So, which is higher? Obviously, gross only higher, the opening and closing values. So, gross is always greater than net. Gross is always greater than net. Okay. What is national? What is domestic? The difference between national versus domestic is NFIA. The difference between national versus domestic is NFIA. You tell me which is higher, which is lower. Now, is national bigger or is domestic bigger? Generally, it depends. Sir, what is the difference? We call it as NFIA. When I say NFIA, it is the income earned by Indians working outside India. We will add it. It is income earned by outsiders in India. We will minus it. Okay. If our people are earning more than the outsider who are earning in India, then national will be higher. Consider, Indians are earning 100 rupees. Foreigners in India are earning 80 rupees. That means there is a plus 20 rupees. Oh, in that case, national will be higher. But if it is vice versa case, then domestic will be higher. But generally, I'm taking. Generally, national is higher than domestic. Sir, what if in the examination our people earned 80 and outside people earned 20? 100, then it will be minus 20. Yes, you consider national as higher only, but instead of plus 20, you just put minus 20. It will be automatically taken care by the equation. Is it okay? Just play with the symbols. That's it. Now market price versus factor cost. What is the difference? NIDT. Which is greater? Sir, market price is always greater because by adding NIDT only we get the market price. If we deduct that, we get factor cost. Market price is always higher than factor cost, provided with an exception that if the subsidy is more than tax, then it could be reverse way. But generally it will not be like that. It will be generally the normal way only. That means, sir, why did we summarize it? Summary. So summary is, for the purpose of solving that equation, we might need that summary. Current is always higher than constant. Yes, sir. That means if in the examination constant is given and they are asking us to find out the current, that means we should add something. But if they have given current and they are asking us to find out constant, then we should minus something so that we can reach it to the constant. Done? Right. Gross versus net. If in the examination gross is given, then they are asking us to find out net. What is the difference? Depreciation. Plus or minus? Minus. Yes, because gross is always higher, net is always lower. The difference between gross versus net is the depreciation. That is why it is minus. Gross is higher, net is lower. Then national versus domestic. National versus domestic. What is the difference? NFIA, which is bigger? Sir, national is bigger. That assumption I am taking. Our people are earning more than outsiders in India. So whenever we are given national and ask us to find out domestic, minus national minus something equal to domestic, or domestic plus something equal to national. Done? Last one, market price versus factor cost. Market price minus something is equal to factor cost, or factor price plus something, that is NIDT, is equal to market price. Is it okay? One last thing which I wanted to share here is the current income is called it as, current national income we call it as, can I say this is including the inflation? Because it is including the inflation, it is also called as nominal GDP or nominal national income. What is constant? Constant we call it as real GDP or real national income. Sometimes it might be asked, what is the difference between nominal versus real? The difference is, we know it, that is inflation. If they ask maybe current or constant, that is also same. Nominal versus real, that is also same. Done? Yes, sir. Last 2-3 minutes, we will wind it up. Okay. Sir, GDP at MP is already given. Can we find out GNP at FC using GDP at MP? Pause the video and you do it. GNP FC is equal to what plus what minus what? If you just observe, what do we have? Gross. What do we need? Gross only. That means don't touch anything because don't need to change anything. What do we have? Domestic. What do we need? National. What is the difference between domestic and national? Sir, NFIA. Should we add or minus? You should apply that common sense. Summary part I have given. Domestic is given. We should go to the national. That means we should add something. That is add NFIA. NFIA. That means DD is over. P is always constant everywhere. What do we have here? Market price. What do we need? Factor cost. Sir, what is the difference? NIDT. Sir, should we add or minus? We should think. What do we have? Market price. market price is always higher than factor cost? Yes, sir. That means we have market price, we should go to the factor cost. So minus NI dt. Understood? GNP at FC equal to GDP MP plus NFIA minus NI dt. Oh, how did we learn it in the PUC? GNP FC equal to GDP MP plus NFIA minus NI dt. This by heart we have done. You don't need to buy it anything. You can easily remember by remembering those 4 concepts. We will try one more example. We try one more example. They have given, we will take the utmost extreme example. NNPFC we have to find out, but they have given GDP at MP. All the variables are changing here. GDP MP. You tell me, I know now you are experts in all those 4 concepts. What do we have? Gross. What do we need to find out? Net. What is the difference between gross versus net? Depreciation. That means it is minus depreciation because we have gross and we should reach to the net. Then we have domestic, we want national. The difference, NFIA plus or minus, plus NFIA. Then we have market price, we want factor cost. What is the difference? The NI dt. What is should be added or should be deducted? We have market and factor cost. We should minus something, minus NI dt. Is it okay? Yes, sir. You tell me, can we find out this NNPFC using GNP MP also? Yes, sir, we can easily find out. You don't need to buy at anything. Minus depreciation plus NFIA plus NIDT minus NIDT. Don't need to do anything. Just remember the concept, plus or minus, go by letter. That's it. For GNP MP, can we find out NNPFC? So, GNP, we have gross, we need net. That means minus depreciation, we have national, we need national. Don't touch anything. Keep it there, then and there only. We have market price, we want factor cost. Minus NIDT. Minus NIDT. That is NNPFC. NNPFC. Now, can we find out NNPFC using anything? Yes, NNPFC can be found out using the remaining 7 variables. I can find out using GDPFC, NDPMP, NDPFC, etc. Any variable I can use and I can find out anything. I can find out one thing using any other 7 variable. I can find out NDPMP, NDPFC, NNPFC, NNPMP, everything using the remaining 7 variables. Plus or minus approach, you have to just follow that. Revise entire concepts once, then you can easily find out. Now, last but not the least, what is national income? National income is nothing but NNPFC. From now on, whenever somebody asks what is national income, you should give the definition of NNPFC. NNPFC is the nothing but national income. Is it okay? Understood? That's it for today, guys. We'll meet in the next video. Take care. Bye-bye. I'm your CA Veeraj. If you liked this video, if you felt it interesting and simpler, don't forget to subscribe this channel and don't forget to hit the bell icon. Thank you. Bye-bye.